Welcome to the Scaleup Valley podcast, where we bring the best of the best to help you scale your business from 1 million to 1 trillion. Today, we have a very special guest. His name is William Kilmer, the managing partner at C5 Capital. William, welcome to the show.
Thank you. Thank you, Miguel. It's good to be here.
Absolutely. Likewise. We have been in touch for a very long time. You are also a very good friend and an amazing, you have an amazing career, and we really admire your work. So congratulations for everything that you've been doing. And it's a pleasure to have you on the show.
I was just going to say, I appreciate it. And by the way, I have a hard time calling you Mike because you will always be Miguel to me as a friend.
That's fine. Both names are mine. So you are free to keep calling me Miguel. So, and let's get to know more about yourself, William, for the audience. So can you let us know a little bit more about your career background and how did you join C5 Capital and what does C5 Capital?
Sure, absolutely. So I'll start with the end in mind and talk a little bit about what I do right now. So I'm a managing partner with a venture capital fund called C5 Capital. We're based in the US and the UK, and our focus is on investing in what we call the secure data ecosystem, which is essentially looking at cybersecurity, cloud infrastructure, mainly around storage and data management, and also applied data analytics. So we look at machine learning and AI and how it applies to solving specific problems. We're on fund number 2, and we've already made about 7 investments out of this fund, and we'll continue to do so. And we invest in the US, UK, Europe, and to some extent also in Israel. And what we do is really try to invest and add value to the companies that we're investing in. My background before that, I've been the CEO of a couple of companies directly, either in the data analytics or cybersecurity space, which is where I've spent a lot of my time. I've been an operating partner with another investment fund, previously, and consulted with a number of other technology startups. And before that, I was actually a managing partner at Untitled Capital. I ran as the managing director the European investment arm of Intel for a number of years. And so, and I had a startup before that we were acquired by Intel. So I've sort of been investor, worked with startups as a founder, and had some experience working with a large technology company throughout my career. So it's been a little balanced and frankly, a little scattered at times.
That's an amazing profile. So as you know, on the show, we cover a lot the scaling up stage from 1 million to 100 million, especially for B2B SaaS enterprise companies. And we've been covering in the last shows, not only the 100 million to 1B in terms of IPO with companies as Box and Slack, but also from 1B to 1-3 with large companies as BASF. We also had Worth, Fujifilm on the show, Schneider Electric, etc., and investors that are working with the scale up. So you have covered all those segments, and we can almost discuss today. We will focus much more on your investor and operator side. So how do you, and of course we are living at this moment and we're recording this podcast. Now it's very relevant to say when we are recording. It's the 10th of April of 2020. And we are living a pandemic crisis across the world, and we all need to adjust to the new situation. It's times of threat and also times of opportunity. How do you see your industry and your portfolio going through the crisis?
Yeah, that's a great question. And I think, for a lot of us, there's just a lot of uncertainty today that we're trying to, first get our arms around and understand. And I think, for many of us, we'll still be doing that for some months as we, understand current situation and we understand how we're going to transition back to whatever the new normal will be whenever we reach that. But, for us, we've spent the first month or so I guess thinking about what our own priorities are as a venture fund and what we think we need to focus on directly. And we actually came up with a list of priorities And I think, this is a good guideline for us, is that every time we talk about something that we're doing right now, we go back and say, does it fit one of those 5 priorities that we had as an organization? And if not, we need to set that aside. One of those has been focusing on what we look at as our portfolio resiliency, looking at the companies that we've already invested in. And, obviously we have a belief in those companies we had before COVID-19. And so we want to make sure that they all survive, if not thrive, once we get out of this situation. So, we've spent the better part of a month sitting down with each of them, helping them to think about, what are the issues that they are facing right now? What are the areas of uncertainty? How do they plan for that? What's their budget? What does their budget need to look like to reflect some of the realities? But also importantly, what should they be looking at to make their company more resilient and, prepare themselves for what future opportunities there are. And I think, for us, we've sort of set with every organization that, they should have 3 areas of focus right now. And that is, first and foremost, to realistically assess what is the company facing in terms of business, over the next 3, 6, 9, 12 months, maybe even longer, and making sure that they can survive that. A lot of the companies that we work with are startups, they require capital. And so the first thing they need to do is just look at that. The second is turning to their people, right? The most valuable resource they have alongside capital. And, making sure that they are focusing on the well-being of their employees, that they are focusing on their own well-being as leaders, and that they are making a significant investment in the leadership and in the employee base of the organization to make sure everybody's doing well and has what they need in order to thrive. And for those that, may be running into difficulties, and, people will run into difficulties, maybe health, financial difficulties, emotional or mental, issues that they run into, making sure that they're providing the resources and the support to help those individuals. And then the last that we look at is, how do they look at the landscape of what's happening and it's shifting so that they can take advantage of opportunities. And those might be longer term opportunities today that, that they see that they can take advantage of, that may change the structure or the way that their industry, or market works. But even just looking at the short term of how do they take advantage of the opportunity, so to speak, of helping their customers? A lot of times we come into this, I think a lot of people come into this crisis thinking about, how do I maintain my sales? How do I hit the numbers that I had before? And it's an opportunity, though, for us to step back and say, what are the actual needs of my customer, or my potential customer? Can I really knock on their door and ask them to close a sale? Or is there a way that I can actually add value to them that, maybe it's deferring a sale, that would happen, but it's actually strengthening them in some way, showing them that we can add value and building a longer term relationship. So, I think to me, those 3 priorities around, just operational resiliency, the people, and making sure that you're watching out for your people, and that you're looking for those opportunities, both short term and longer term, to shore up your organization are critical elements. And that's what we spend a lot of our time helping our companies to understand.
It's a very good point. And there are companies that are thriving during this crisis, and we are seeing massive adoption of online ways of collaborating. We are seeing Zoom and Slack growing like never before. So we just need to remember that Zoom has kind of head of IPO with 150 million in revenue, and now it's around 600 million, and very closely we'll get to 1 billion revenue, which is an amazing growth rate at post IPO, right? We were also discussing telco telecommunications organizations are also thriving during this period. Another ones, retail, travel, airlines, might be suffering much more. So it also depends. It might need to have a pivot across those scale-ups to focus more on verticals or to double down on verticals that might be thriving and reducing or mitigating the risk of exposure to the verticals that might be suffering the most in the upcoming months. Not to talk about collections that might be that might not be collected, or that might be delayed in terms of collection. So where do you see the big opportunities in terms of industries, and do you see your clients moving their targets to verticals that might be in better shape?
Right. I think a lot of the companies that we invest in, first of all, we're very fortunate to be in a market, in particularly in the cybersecurity market, where we spend most of our time. Most of those companies, I think, will do fairly well during this time. There's a need out there for organizations to protect themselves, and I don't think that's going to change. Nevertheless, we are going to see some budgets shift, and I think organizations need to recognize that, while they may have been within that budget that existed a month ago or 2 months ago, that may shift even within the cybersecurity space to things that are more of a priority. For example, we're seeing a lot more direct attacks on companies with hackers who are trying to take advantage of the uncertainty and the concern around COVID-19, where the attacks are happening that are different or maybe more frequently in a certain area, that may cause an organization to shift, their priorities or their budget. So, even within a thriving industry, we're going to see, some changes overall. Clearly, what we've seen across the board is that, technology is playing a major role in the shift of employees right now. We have more home workers, we have more people using cloud-based applications, more cloud storage, is occurring. As you mentioned, an increased need for telecom services in a distributed nature versus, in a single office. Those are all going to not only shift, but probably increase those market opportunities. I saw a status the other day that, the increase of cloud storage has gone up 255%, over the last month or two. I think we're going to continue to see that. Along with that, we're going to see things like, what we call shadow IT, where people use their own credit card and decide, well, I'm going to buy a Zoom account, or I'm going to use this application to share information or to plan. So, those things are going to have to be managed a little bit inside of a company. They'll spend more to do that. I've heard some instances with companies that we're looking at where budgets are actually moving up. We talked to a company that's selling to a major bank, somebody that would take 9 or 12 months to make a decision on a particular product, but because they need it, they've said, we're going to do this in 4 weeks. Right? We're going to accelerate. So that's terrific to see those. I think clearly we're going to see shifts in other areas of the market. You and I were talking about earlier the shifts in the retail market, and the fact that we're really reaching this digital divide. It's amazing to me today to think that with all of the things that we tend to buy online, online e-commerce sales are still about 12% of all retail sales. That means there's 88% that's still being purchased and delivered out of a store somewhere, out of a physical location. I think we're reaching a digital divide where organizations need to learn how to accommodate that. Some are doing it very, very quickly. Others may delay, and they may not make that divide or that cutoff. So, and then I think we're going to see more replacements for things. Certainly the airline industry and the travel. I used to travel almost every single week. I'm now have been 4 weeks working at home, and have used a lot more of my Zoom account than I did previously. So we'll probably expect things to change. I mean, I don't see myself going back to traveling every single week after this, because I think there's a lot more that I've learned how to do over video conference. So as you mentioned, while Zoom goes up, we'll probably see some of the airline travel go down, for example. And obviously some of it will, go back to some level of normal, but I think we'll see some significant changes. Where we'll be in terms of other, lesser tech industries, I think we'll certainly be, we'll certainly see some changes there over time as well. But I think we're going to be catering to, a customer base that is going to be a little bit more home-centric and centered. We'll probably travel a little bit less. and probably expect more, services and more, of things being brought to them or delivered to them directly versus, spending more time out. And I think those habits, while it oftentimes takes time for those to change, a big shock like this could really cause, a lot of those to change quickly and to stay that way.
It's interesting because part of the scale up and venture capital industry, it's all about understanding and anticipating and finding the right timing to leverage those huge disruptions. So this is a time of a huge disruption that might be accelerating dramatically the adoption of some solutions that might only take in 5 or 10 years. But because things are changing so fast, maybe that the right timing is now. We were discussing before, and you just talked about also the cloud storage stats, but also cybersecurity. There are no large incumbents nowadays. And definitely, as you said, in terms of trends and what might be happening, this would be a huge industry in the upcoming years. And this crisis might be accelerating the growth of that industry. And usually investors and entrepreneurs are looking to those opportunities to build large companies that can become the new incumbents of the industry or be acquired by the current incumbents that in this industry, as you were explaining me, they don't happen. Can you just share a little bit more about that with the audience?
Sure. Yeah, absolutely. And maybe to start that and to link back to our earlier conversation, it's interesting that almost everything we talked about is an acceleration of a trend that already existed. And
exactly,
I'm writing a blog post on understanding uncertainty. And one of the things I start with is look at the trends that already exist out in the marketplace, and you're probably seeing a lot of them accelerate. When we talk about e-commerce, people working from home, being able to do more, video conferencing, more delivery of, services. Customization of services. Those are all things that are happening already that are probably going to accelerate or that are accelerating during this time. So it should be no surprise, that they exist and that we'll see more of it, at the other side of this pandemic. But that certainly is the case, as it impacts cybersecurity companies. It's an interesting market to be in, and I've been in it long enough to see several cycles of this. But when we started in this market, it was a high growth with a couple of very large companies. If you look back even 10 years ago, there were probably 4 companies that, you could really say were the largest of the large cybersecurity vendors. And they would be Symantec, McAfee, Cisco, and Juniper, right? And Juniper, basically focused on networking security. And there were a lot of other, smaller companies like Checkpoint and others that were out there. Today, that's almost completely gone. I mean, Cisco is a large vendor who still sells cybersecurity, but they're more of the prototype of today's model, which is there are either pure play cybersecurity companies that tend to be much smaller. They're the FireEyes, the Palo Altos, that are out in the market today. Now, we're seeing CrowdStrike and Okta. Zscaler and others that are kind of the small, they're $1 billion, maybe $5 billion company. And then you're seeing companies like Cisco, Microsoft, Apple, Google. They've all learned to build security into their products. But the reality is, this is a very, very cyclical market in terms of innovation. And, today's incumbents, what we can say almost without a doubt is today's incumbents will not be tomorrow's incumbents. I think there's very much a focus in this industry that as you solve a problem, you scale. And as you scale and you increasingly are dealing with a customer base that is relying on you, you focus more and more on being able to solve that problem better for them. And what happens is a new set of problems come up. You're generally not looking at it, or you're not able to spend the resources on it. And so somebody else comes along, an aspiring, founder, entrepreneur. They go build that solution. They solve the problem, start to grow, and either they get acquired or they grow big enough, like a Zscaler, et cetera, where they go public with based on their new solution. Then they get big, and the cycle starts all over again. And I think it's very much that case in the market. It's to me, not so much that the big company can't figure out how to solve the problem. It's just that they don't put all the resources into it, and they don't have the incentive to do it versus continuing to solve the existing problems that are out there. And I'll give you a great example. I met with one of the former large security companies a number of years ago, and they wanted some help in terms of looking at innovating and how they developed new products and new capabilities. And I was working with an organization. We were looking to partner with them, and we came up with a list of things that we could cooperate with them on. Almost without an exception, we went through that list, and we said, "Well, have you thought about this?" "Yep, we have a team working on that." "Do you have this?" "Yep, we have a team working on that." And we asked them, "Well, why aren't you accelerating this? Why aren't you taking this out in the market?" They said, "Well, we have the technology. We just don't see that the market's large enough for us to go after. So we're not really putting as much resources into it versus what we're doing with our core business." Well, if you went back through that list, you'd see, each one of those areas, there's a successful company today that is, probably $100 million or more in revenue, but it's not inside that large organization because they didn't follow the opportunity when it was uneconomical. And so it was too late for them to actually do it when it was economical for them.
Amazing. We always discuss on the show what we consider the three critical ingredients to scale, and we keep iterating on them as we bring amazing guests like you to the show. So number one, radical focus. Number two, world-class leadership. And number three, a culture of execution. And those are even more important during wartime. In terms of defining the critical priorities and being laser focused, you already discussed it, something that you have recommended to your own portfolio. So kind of cash is king, take care of your people, and be aware of the shift of your strategy as the landscape is also shifting to leverage those opportunities. So I think that radical focus is almost covered. Let's go for world-class leadership. So what needs to be done during peacetime and wartime, and even shifting the mindset from peacetime to wartime might be difficult for some leaders. So, and usually entrepreneurs are good allies of war times, because even when it is peacetime out there in their companies, they are starting up or even scaling up. And usually we all know that one quarter seems 1 or 2 years in a normal company. So how do we do the shift to navigate during wartime and peace times with our teams and as leaders?
Yeah, I think the analogy of wartime versus peacetime is very telling, because it really does feel like almost like you're out there working and bombs are exploding and they're distracting you, and it's very difficult to maintain leadership. I think for those of us who've never served in the military or been in war, maybe the best analogy is sports. You can practice sports all you want, but then when you're out on the field, maybe playing, football, if you're playing football or soccer, or you're playing basketball, something that, is very fast paced, it's hard to take it all in and be able to think while you're actually doing. And so, I think for leaders right now, a lot of it is just being able to stay focused on what's important. It's having those priorities, going back to those and reminding yourself of them, doing the best that you can to replicate, especially now in a more remote environment, how you normally do your business, and doing that in a virtual way in order to support the culture and the level of execution that you need as an organization. I think this is a very tiring time. When I talk to people right now, they talk about working extra hours, the fact that they don't have a commute to work or a commute home. They don't have time to decompress. A lot of times, it's difficult to say when your day starts and when it ends. But I think it's difficult for people to do that. So, one of the things that I recommend is setting aside time as an organization to be able to think, to be able to kick around and talk about new ideas, be a little bit more creative. And, even building that into your schedule. So for example, for us, we used to have a Friday morning meeting where we would get together in the office, sit down, and just had no agenda whatsoever, so that we could talk about whatever was a concern, a dumb idea, whatever it was that we wanted to bring up. And we've continued to do that by video. So, we get on every Friday morning at 9:00. We kick around ideas and talk about, what's important to us right now. It's a much more informal meeting, but it sort of preserves that culture of the organization to say, we need to take a step back and look at the big picture and really try to understand what's happening and be able to adapt to that. And I think, that's important. To me, I always say, a good leader is also a good writer. It's someone who can sit down and write things out and collect their thoughts in a way that they can analyze them and understand their current situation. Because, more than ever, I think we need to, make a move, stop and reorient ourselves, decide where we are, look at what should we be doing next. And it just takes more effort and more focus to be able to do that in this type of environment where so many things, may be going wrong.
That's an amazing one, and that's why it's easy to get distracted during wartime, because there are a lot of threats, and usually our emotions are also playing with us, right? The fears are getting outside, and we tend to run to solve those fears, and maybe we are not looking for the opportunity, and we miss those opportunities. And even more important, our teams are our mirror, and if we are scared or afraid of something, they will also become have the same kind of feelings. Your second point and your second recommendation is really to be aware that your people are your most valuable resource. And I know that you are very passionate, and we all know that during wartime or during the game time, as you were saying, in terms of the analogy with sports, it's when we face the obstacles, and as teams we are able to go through those challenges and get stronger. So what are some of your tips to keep building the culture in a remote or working from home environment?
Yeah, it's difficult, I think, especially for organizations who are used to being together physically so much. But I think it can be done. And I think there are lots of examples of companies who have worked virtually for a long time and built their cultures naturally, even though that they've been virtual, that indicate that it can be done and it should be done. To me, the first part is just to recognize across the team, and especially the leadership of the organization, about how important culture is. And I think you've got to go back to look at, what's the value of culture? Why is that important to us? And, to me, I think that there are three areas, that make culture so valuable. Number one is culture is important because it helps you in execution, right? It drives engagement in the company, makes people feel like they are there and they're involved and that they can have an impact. Two is it differentiates you as an organization. We know, when people go in and ask about what's the culture like in an organization, they're really looking for, do I fit? Does this make sense for me? Am I going to enjoy it or thrive here? And I think, if you look at organizations like, Zappos or Netflix, organizations that have really emphasized culture, it's a huge differentiator that they have so many people that want to work there because they understand the culture and they buy into it. And then the third, I think, is that culture helps in organizations being able to adapt and be resilient over time, right? We always hear the phrase that's been attributed to Peter Drucker that, culture eats strategy for breakfast, meaning that, no matter what your strategy is, if your culture isn't working right, you're never going to execute. I think it can be the opposite. I think that culture can feed strategy. And that if you create the kind of dynamic, open environment where people are able to assess what they're doing, openly talk about what's working, what's not working, and look at adapting, you can actually create a much more flexible and dynamic strategy over time that will work. I mean, you take an example of a company like Netflix that has gone from, DVD distribution to online streaming of movies to essentially being their own content provider. they've done it because they've had a flexible strategy that has allowed them to adapt when the market conditions change. So I think if you recognize how important it is, you continue to show the team that you're focusing on it. And then you take the essence of what culture is, which is, shared beliefs, practices, shared values, and you keep emphasizing those across your virtual channels as you're communicating and working together. I think that you can maintain it and you can continue to have it thrive. I think it takes more work and it takes more sort of overt discussion about how it's working and whether or not it's working across your leadership team and in the organization. I was an interim CEO in an organization a couple of years ago, and I spent a significant amount of time not only talking about culture inside of the team, but actually going deeper into the organization. So every couple of weeks, we would have a lunch meeting where we would bring in a cross-section across the entire organization of maybe 10 or so people. And we'd sit down and say, how's the culture? What's working? What's not working? Where do you see that we're supporting what we say we're going to do? Where do you see we're not? And how do we change that? And just having that open dialogue with the team about, is our culture working for us or not, really went a long way. And it provided a lot of feedback that then we could use in order to reinforce, what we thought were the positive elements of culture that we needed to be successful.
That's an amazing suggestions for our written chapter of this culture of execution ingredient. Thanks for sharing them, William. You were saying that a leader is also a good writer, or a leader is a reader is another deviation of that quote. You also have a book yourself. For people who would like to read more and know more about you, would you like to quickly talk a little bit more about your book?
Oh, sure. Yeah, I'd be happy to. Thanks. So the book is called Transformative. It is about essentially being able to develop an innovation strategy in your organization. So, if you look at why have I written it, it's really oriented around the fact that I've seen, hundreds, if not thousands of organizations who spend a lot of time innovating, but they don't really have a strategic objective or goal with their innovation. And essentially, how are they going to transform the markets that they're working in, so that they provide a better customer outcome and a winning culture or a winning strategy for the organization. So the book's not quite out yet. I'm still going through some finalization on that. But if people want to connect with me on LinkedIn or go to my website at wkilmer.com, then they'll see more information about it. And a lot of the things that I blog on are excerpts from the book. So hopefully those will help as well.
It's awesome. And we came to the last question of the show, and one of our favorites. If you would have the opportunity to meet William at the times of Intel Capital, what advice would you offer to your younger self?
Oh, that's a great question. That's a difficult one. I think for me, it would probably be less concerned about what other people think and carve your own path. To me, especially working in a large organization, you tend to think about the politics. You tend to think about what other people are thinking. How are you going to advance in your career? To me, I'd be more focused on what is right for me. Of better expressing my own opinion and not being worried about what other people think.
Amazing. William, thanks so much for making the time to share your experience with the audience and for providing some light on how to leverage the current COVID-19 pandemic crisis.
Always a pleasure, Miguel. I love what you guys are doing and fully support it, and look forward to continuing to talk to you.
Thanks so much, William. And to our community, thanks for being there. As you see, we keep bringing you the best of the best so you can leverage this huge opportunity or convert this huge threat into a huge opportunity. We keep bringing you the best tools, the best practices, the best frameworks to help you scale from 1 million to 1 trillion. Stay healthy and see you soon.